Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a juicy situation with Sable Offshore. It's a bit like watching a surfer argue with the ocean. Spoiler alert, the ocean usually wins, but let's see how this plays out. We will be talking about the Form 8K filing. Sable Offshore on February 19th, 2025, filed a report about a dispute they're having with the California Coastal Commission. This report gives investors an update about a legal battle and construction issues Sable is facing. The problem started when the California Coastal Commission, called the CCC for short, sent Sable a warning letter on February 16th, 2025. The letter was basically saying, stop what you're doing or we'll make you stop. It's related to some repair work Sable is working on fixing some problems called anomaly repair work, but the CCC thinks Sable needs to get their permission first. Basically, Sable says they have the right to do this work because they got approval from the county, but the CCC disagrees. On February 17, 2025, Sable replied to the CCC. Sable argued in a letter that the Coastal Act doesn't allow the CCC to issue a cease and desist order at this point. And it's like saying, you don't have the power to stop us right now. Sable also said they plan to continue the repair work because the county approved it. To make things even more interesting, on February 18th, 2025, Sable sued the CCC in California court. In the lawsuit, Sable is arguing that the CCC is wrong to try and stop their work. Sable wants the court to declare that the CCC's actions are illegal. They also want the court to prevent the CCC from taking further action and to award them money to cover the damages that the CCC allegedly caused. The CCC responded by issuing what's called an Executive Director Cease and Desist Order to Sable on February 18, 2025. Despite all of this legal drama, Sable says their pipeline repair work is still going ahead as planned. Even after the cease and desist order, Sable pipeline repair operations remain unaffected, which is definitely something to keep an eye on. The company included a warning about forward-looking statements. This is a standard practice where companies remind investors that predictions about the future might not come true. Sable notes that many factors could affect the company's actual results. These include the ability to restart production, potential legal issues, and compliance with laws and regulations. They point investors to their annual report and other filings for more information on these risks. It's a way of saying we're making our best guesses, but things could change, so don't blame us if we're wrong. Now, let's take a step back and look at the big picture here. Sable Offshore is in a tricky situation. On one hand, they need to do this repair work. On the other, they're fighting with a powerful regulator, the California Coastal Commission. These sorts of disputes can be costly and time-consuming. Here's my take on Sable. The company's direction looks uncertain right now. The fight with the CCC is a major headwind. It creates uncertainty about Sable's ability to operate in California. But if Sable can successfully resolve this dispute and get back to producing oil, there is a strong value. From a risk perspective, the legal and regulatory challenges are the biggest concerns. The outcome of the lawsuit and the CCC's actions will significantly impact Sable's future. So what does all of this mean for Sable's stock price? Valuation is tough right now because of all the uncertainty. If Sable wins, the stock could jump significantly. If they lose, it could drop. Based on current information, a reasonable price range might be between $1 and $3 a share. However, this is a very rough estimate. This stock is very speculative. I am leaning bearish for Sable Offshore. There are too many risks and uncertainties at play. Thanks for watching, and don't forget to subscribe for more Corporate Decoder reports.